Welcome to a special insider episode of Hedge Heads, normally just for subscribers. We're making this one free so all y'all can hear what you've been missing.
Well, John, another Thursday morning, and what a difference a day makes. 90 degrees all week with insane winds to now, I think it's 65, pouring rain, and if possible, there's more wind than the last 3 days right now.
Yeah, and because I'm fishing tomorrow, I think 39, and we're going to hit 39 in the morning. That sounds about right, with rain and wind.
Sounds like spring in Minnesota. So I don't know how spring is across the rest of the country, but does a smattering of rain this morning end all drought talk?
You know, it's going to put it on the back burner. They really didn't even get that going. It was the heat, and then they saw this cool coming for the upper Midwest. And then you don't need any rain in the east. So, yeah, it's going to keep a lid on that for now. But you could tell how dry this would get and how fast and how dry it is right now. So it's summer, and you're gonna have these weather scares. That's why I'm looking at the bean market. After the report that we just had here in May, on Monday, it's a market that's very interesting to me. They were not the numbers they were expecting at all. Suddenly, you need 52.5 for a yield, and you're gonna have a carryover of 295 million bushels. I'll have to go back and look. That's about as tight as I've seen a projected carryover going into a summer. I'm sure we've had tighter in the past, but with the amount of acres going in, it's going to have to be perfect every day in the summer. I feel like that's a market that really needs to be looked at. Not necessarily something you dive in right now, obviously with the rain, and then you had a biodiesel rumor, or they sent the papers over. The story is just breaking right now. Soybean oil was limit down. It's definitely an overreaction. It was disappointed with the numbers they saw in 2026 for the projected blends. But the story's out there. You can go read it. I'm sure it's going to shake it off by the end of today. So it's not without its risk either. It's not like beans are so tight and we don't have any and it's going to go flying. It's this that it has to be perfect the entire summer, and there's the odds that they don't worry about it at all in any windows is not very high. So you look at September options, they're very attractive. 40 cents out of the money is like 30 cents. And it's at a low price, and the cash market's been firming in soybeans. Speaking of firming, that July corn is a joke. We 1.6 million bushels again, or 1.6 in the exports, excuse me. And another huge week for corn. So we just keep selling that corn. The bean market's got a bit under it up front as well. So it's not all bad news at all in the grains. The problem is the futures have been the bad news. There was never anything wrong with July corn. It's the same market that we've seen, and they absolutely crushed it. And they got it under the price of December briefly for like 20 minutes a few days ago. I think we're about 8 cents over right now. And they just destroyed that July corn. And it is not a market that's trading anything fundamental at all. And beans, kind of you throw that in the group as well. That's held together better. Wheat has definitely been with corn. And they just beat these markets up every single day. They finally let up. And I'm not sure why they'd want to short wheat when we're the cheapest in the world. Exports are good. And they just want to beat these markets up. So soybeans, back to soybeans, that's the market that I'm looking at, and I'm going to get involved here. Call me for details. There's a lot of different ways you can get involved. With the way the markets are trading, I'm definitely going to go with a limited risk way. Whether you want to do a bull call spread, which is buying a lower call, like 11 or a $10 or 10.40 call, 10.20 call, and then sell a higher call. It's this window of profitability you can have. So you're basically buying a window. It is an open to margin calls, but it cheapens it up. Or you can just outright call. Obviously, there's futures. There's even minis if a guy wants to stair step in really, really lightly. But soybeans are definitely on my radar screen. We don't know what the weather is. The weather could be perfect from day one. I mean, it's not impossible. We had that in 2014. But knowing beans, they're going to get worried somewhere along the way. That's why at this low price with these good sales, I'm very interested in that market.
Yeah, I feel the same way about wheat right now, as you said. Like, the news is good, the short's huge. It's totally speculation, but there seems that there should be opportunity to look at there. I don't know where to step in. I'm just starting to look, but I'm very interested by wheat right now, and maybe that means it's time to sleep in the street.
Yeah, it's the way wheat's been. It's been a bad market, a really bad market.
It has, but we've never. I shouldn't say never, but we don't export wheat, and we are.
Yeah.
I mean, that to me, I've been in this office 2017, John.
Yeah.
It's the first day I stepped into this office. I remember wheat being way higher than this and saying, oh, well, there went the bid. Now we won't export any of it. We're exporting it now. Like, it interests me. I'm not saying it's time to go out and buy 10 contracts or something. Or
yeah, the only problem is they're hauling in the Kansas wheat, and it appears to be a big one, so you're seeing that. You're seeing harvest pressure. Chicago's got a story for sure, and also Minneapolis wheat is just very early in the growing season. I'm getting some reports that there is dryness, but now with this cool and wet moving in, that's gonna really tamp that down. It's a market that I like to talk about. I like to pretend I'm gonna get involved, and then every time you do, it kind of breaks your heart. But yeah, it's due for its upcycle where you see this down. They get heavily short, and then you get a reason for it to rally for a while. Hopefully that's right around the corner here. I just still like that explosiveness of soybeans. I like it when its back's against the wall and it has to be perfect every single day. And you just can't have a bump in the road now with this carryover. And that report, I don't know if people realize how important that report was. It also breathed new life into corn. On paper, that looks very supportive, even though they're absolutely beating up on corn for no reason. The 1.8 in the back end of corn, you can question all the demand numbers, and I think it should be, but we still don't know if there's going to be trade deals. It actually might be better demand. You just simply can't know. But more importantly, you can't disprove that demand this time of year, so you wouldn't want to fight it. So if it's 1.8 and it needs to be 181 for a yield in corn, and it's like 295 million bushel carryover for beans, and it's got to be 52.5. I like both those numbers. I like beans better, but it has to be perfect. One can say it's off to a good start. I don't think that guys are arguing that it isn't, but the summer changes quick. Attitudes change quick. I'm going to probably use all this rain and wind and this cool temperatures when it feels like it's never going to get hot again to get involved. We'll see how this biodiesel thing plays out today, but that's the market I'm looking at. Beans I'm very, very interested in.
I was just cruising through the options here on beans while you were talking about it, and definitely this morning has caused volatility go up.
Yeah.
The prices are much higher than what I was looking at yesterday. So
yeah, and we're getting to that time of year, so you got to try to thread that needle and get what you think is a good deal. I don't think we're going to have a large break, so and it's going to be in these areas. But we're down 15 this morning,
right?
So it's following obviously soybean oil. And you know how this stuff trades; it'll get tired of that story very quickly. And we saw beans down 15 the other day, and they were buying the dip. And by the close, it was up 2.3. So they've been buying dips in there. The implied volatility is going to start stepping up, and that makes the options more expensive. So I'm going to be busy on the phones today, even talking to guys about it.
Yeah, I would say you got to shop fast right now. I mean, depending on what the moves are, but yeah, it's pretty crazy how a story or a move like that can jump the options so much, which is why when we talk about that options are looking cheap right now, sometimes you got to make a move when it doesn't feel like it.
Yeah, before the report would have been the move, and no one expected those numbers, and no one's really talked about it. You see a little bit on Twitter. Those numbers basically saved everybody. They're going to give everybody a very good chance at much better marketings if there's any threat at all. Then let's say we had 2.1 billion bushel carryover. It would have been really hard to get that motivated to even rally. That's what they were thinking it was going to be. So it's just an absolute gift given to everybody this May. June's probably going to hold some nasty surprises. It usually does, but that's a little ways away yet. So this window, the stuff looks really good. Beans might have less acreage in the June report. That's going to be a volatile report. We're going to talk about buying strangles on that. That's the kind of report that could go very fast either direction. And corn, it's going to be a huge one for corn. But for right now, they gave a very nice gift. Well, I meant they're supposed to be the real numbers, but still, it was a kind of a shocking surprise, and that's why beans were up 25. That made the implied volatility jump. Like, hey, maybe we have a different market, but it's still got this really bad attitude. Don't get all bulled up here. Everything's just stuck in the mud. They've just been killing corn, especially the front of corn for no reason, and then giant exports again today. And they just really been beating up on wheat. So these funds want to be short. If we can get them to change their attitude and want to be long, it'd be a very interesting market suddenly. But they're still leaning short. Who knows why? They do whatever they want to do.
Yeah. Well, it does open opportunities if you want to look at that courage call side, though. If they want to pound us short right now, eventually, maybe they can't, or maybe they're right.
Yeah, and
there's no way to. If we knew, we wouldn't be recording this podcast.
Yes, exactly. And I've talked to a few guys about courage calls lately, and it's really a farm decision, or it's a guy. You have to decide: do I want to spend extra equity on reopening the upside or having the upside wide open after I make sales? We went over courage calls last time, and it's like, do you need more bushels? You're already raising it, and do you need more calls? Well, if there's a time of year to buy calls, it's summer, and generally you don't get this opportunity when they run it down into spring. So it's a setup at least there, and it's just simply a choice. Do I want to buy these calls? Do I want something really cheap, way out of the money? There's a lot of different ways to go about it. So when you make your sales in the summer, you can still participate in the upside. That's the idea. And so far, guys are just kicking the tires. It's really hard to get fired up when these prices are so low. There's no equity, no extra equity just kicking around in between the farm expenses, the interest rates, which we haven't talked about in a long time. That's not making anybody happy in farm country. So do you feel like going out there and buying a bunch of calls in front of a summer when it's not worked for years? No, not really. And, it's just simply a choice. Do I want to get something on so I have something in place? When it gets to those prices, I can just pull the trigger in the summer and I have my upside open. It works. The numbers work really good in corn. A little more difficult than beans. It's not impossible, but it is definitely a year set up for that.
Yeah, I think on that interest rate note that we probably need to spend some time talking about them because,
yeah,
man, I mean, that's affecting much more than farms, the entire economy and what's going on there right now with bonds. That probably needs to be an insider episode next week.
Yeah, it's a bad trend. We got softening everything and rising interest rates. Not a good combination at all.
No, I mean, dollar going down is maybe positive for exports, right?
Yeah.
But, it's not necessarily positive for on the farm.
Yeah, it's not going to put any money in anybody's pocket. It's some corporations that export.
Right. Well, glad to end this on a bad note, but I hear your phone ringing. So, happy Thursday?
Yeah, well, I'm ready for some cooler temperatures. I've had enough of this heat already. We're May 15th, and I'm already tired of the heat. I shouldn't complain. We live in Minnesota with the winter.
Well, I'll say this. I'm training for a marathon right now. I got 15 miles to do on Saturday.
Oh, well, I did not know that. Congratulations. Good luck.
Thanks. I'm glad it's going to be 39 and not 90.
Yeah, no, that's tough. That would be a tough 15 miles.
It was horrible doing 12 last weekend.
Well, time to work.
All right. Thanks, John.
Bye.